All right, Zeta earnings. Let's get right into it. Right now, the stock's down about 4% after hours. Tomorrow, we'll see how the market really feels about it and then any analysts' upgrades or downgrades. But the first thing that I would note is that they had a big year over year growth. And this is why bulls like this stock. This is why people buy it, is this top line revenue growth. And it's just a big deal for this stock. And that's why people are about it. So, and then organic growth is at 28%, which is pretty good. You got their, yep, they got them beating the consensus. So they beat and raised on the top line metrics, at least. One thing that you will note here is that they do still have some issues with their bottom line. Uh, the earnings per share miss was pretty significant, I would say. So they were hoping for 20 cents a share. You're at 0.03, and a lot of this is because of their capex, merger integration, and then also some of the margin pressure. We'll cover the margin pressure later, but these other two I will know are potentially temporary. So it could just be a temporary thing that the stock's going through, and then the earnings per share will be better. So, and then they talked about kind of their pillars. This Palantir synergy that they have is, I think, a pretty big deal. Palantir is just massive company, massive revenue. And then this credit facility, which is also nice. It's better to have this than to dilute shareholders, in my opinion. And then I wanted to note here to these super scaled customers growing 17% year over year, which is great. Uh, like monthly active users, that's kind of a metric that I would compare this to. So doing really good there. I did want to bring up too the revenue mix. This isn't a big deal, but this was one of the things that hurt their earning per share consensus. Was just a small shift in the revenue mix to a lower margin revenue product. So there's that. But as of right now, at one point it was at 7% down. I think right now it's down like 5%. Another thing to hear is this growth normalization. If it kind of tapers down, then that might spook some investors because they want, a big reason why you buy this is for the sales growth. But this is organic growth, and that's still pretty good. So, they're doing pretty good. There's some speculation there's just people that are just profit taking, whatnot. The forecast is still strong. You can see they're raising and beat. They're upgrading all of the kind of their guidance for these things. So that's a great upgrade. And I think overall, things are looking, excuse me, they're looking pretty good. So I did want to check out a couple other things here on Mumu. Starting with the valuation, we're going to use price to sales because they're not really profitable. And what you will note, something that I think is pretty interesting, if you put Zeta in the software sector, their price to sales is actually lower than the rest of the industry. So that's pretty good to see, especially with how fast they're growing. And I think that's again what a lot of people that are super bullish on this stock will point out. It's still trading pretty expensive to how it has traded at in the past. But I think the company is transforming, and I think this is an interesting metric to point out. The issue that Zeta has for now is this price to equity because they're not really making money, and like we said in the slideshow, a lot of that's because of capex spending and a little bit of like the revenue mix and those sorts of things. So I think that some of those are temporary. Maybe some of them aren't. But I think that that's maybe a short term windfall, maybe not. But it's just something to take into account. I think this is probably the strongest argument that bears do have against this stock is when's the bottom line going to improve? When are things going to get better? Um, so institutions, I think this is a really interesting picture. Institutional ownership has gone up by 10% over the since the beginning of 2025. So that's pretty big. Institutions are definitely buying it. And I want to check to see if there's anything else that I want to see. The company is healthy, so we don't need to necessarily look at this. Um, I wanted to check their balance sheet here. So 300 million in cash and cash equivalents. And then they have long-term debt of about 200 million. So something to watch. That's why they bring up the credit facilities, because they'll probably have to use that or dilute shareholders, one of the two, which I don't think they'll do the dilution, but that is something to watch for with this guy. So yeah, there was Zeta. Here's its chart. I think it just recently broke above some of the moving averages here. I want to do, so that's, there's a way to add that, but I can't. Something's different with my moo. I think I have to go here. I want today. I want to get, sorry guys, so they changed something with Moo. There used to be I could change the moving averages and show up, but whatever, that's fine. So, but you can see it's been on a kind of up tear. I do believe it is above these moving averages, so that's something to watch on that chart. Here it is. Gosh. Yeah. Okay, here's the moving averages. So yeah, it looks like it was kind of here. Then after hours, it breaks below them. So maybe we'll see like a bounce or something. Depends on what the analysts and kind of the ratings are on it. So there's Zeta. Let me know what you guys think or anything I missed, and I will see you guys in the next one.